So we're seeing quite the post-Brexit fizzle across markets, and it's interesting to notice or to note the pattern we're seeing with, for example, U.S. equities largely trading back in the range they were trading in the days ahead of that shock Brexit vote last week. We're also seeing emerging market currencies coming back, risk appetite coming back in a lot of places around the globe, and the fallout still mostly just evident in European currencies and to a degree in the bond markets globally. So that's the one red flag I have, is that bond yields are pegged still so considerably lower after this Brexit vote for the longer term implications. But elsewhere, again, markets are crawling back and trying to recover from this. It is very uncertain what happens next. Does Article 50 get invoked? We have to wait till October. Nobody has the answers, and so it's therefore very difficult to sort of pick up additional momentum on this story over the uncertainty. And I think that leaves, for one thing it definitely leaves open is for the market to switch focus again as we have to sort of put the Brexit situation possibly on pause. And that is U.S. data. We still had this whole issue of whether the U.S. Economy is risking a tilt towards recession after that very weak set of May jobs reports and a couple of the ISM data points pointing towards a U.S. economy that's at a tipping point. So these June numbers are very important. We got Friday's ISM manufacturing coming up, the ISM non-manufacturing mid next week. Do remember it's a 3-day weekend in the U.S. And then, of course, next Friday's jobs report. So this is the next round of, I think, of key U.S. data that's going to sort of set the tone for the U.S. dollar, and the market can focus back on the dollar if we continue to see a lack of developments from the fallout of this UK referendum vote last week.